SPY, we mentioned this is the most liquid vehicle in my view that you can trade these days from a stock or ETF type of perspective. You can see we get the new setup. See this first, by the way, this first setup when we went over bought on the %R, it didn't follow through. It didn't get through that $96 resistance on a closing basis. So we'd say it comes back underneath that 80 threshold. We just turn off that setup. Didn't follow through that first time. So we just say pass. You can see it saves you from that first noisy trade. How often does that happen to you? You make a trade, you're wrong that first time, and then it gives you a new signal and you go, oh, no, you don't. You're not going to fool me this time, right? Anybody ever had that happen? You say, okay, so then you miss the second signal, which is the valid signal in this case on %R. The first signal you shouldn't have even been in. So it kept you out of that noise and that second guessing. It's not perfect. There's always going to be some of those noisy trades, but the key is it'll keep you out of more of those, and it'll say, hey, there's the setup, there's the confirmation breaking out here. You can see it about $98 on SPY there in July and mid-July. And then you can see we're just steadily and slowly trending. And like we said, if we're at 98, say you sold at 100, you can see it moves through there. It goes actually about 105. And then there's your retest point right back here where %R comes back under the 80 threshold, right there at about 104. So even if you're losing on the short call at that point, I would still say buy it back because you've made more than that on the long side, and basically it's time to buy it back and then at least try to trade it back into the old highs before you'd short a new call slightly out of the money. I'd probably say at that point I'd consider about 109 selling a 110.